Hey, what's up, folks? Welcome back to the channel. So the topic I want to cover today is our stock services market movers. And the case in point that I want to focus on today is a stock for a company known as UiPath, ticker symbol PATH, P-A-T-H. So yesterday, a stock service, which I won't name in this video, happened to issue a buy recommendation on this company around 1 o'clock yesterday. And look what happened, circled here in red, a straight shot up. And by the way, this is a candlestick chart like I covered in one of my earlier videos. So from here on in my educational videos, I'm going to be using candlestick charts. So you see this straight shot up here after this became a recommended buy by a stock service which will not be named. So that suggests that this stock service is a market mover. Now, when I say market mover, what does that mean? That means an institution or a group of people that have enough influence over the market to where they can literally move the price of the stock up or down, not only based on their recommendations, but in some cases, or in a lot of cases, based on their buy and sell orders that they use. But in terms of a stock service or any kind of a stock group where there's a recommendation issued and the stock goes up like this, you can see a clear correlation between clear discernible movement in the price and the timing of the recommendation. Now, I waited a day to see what happened after, because there was about 3 hours of trading left after this, and you see it kind of stabilized and plateaued up here. And then there was a sell signal or a bearish candle here. And then the market opened today, and overall the indexes were up today, but this stock was down. And then it had a little bit, during intraday trading, it had a little bit more buys than sells, so it started to come back up in a bullish direction. Then it went back down, tried to come back up a little bit, but overall finished the day down. So And after hours trading, it's up 80 cents, even though it dropped 1.3 or $1.37 today. So what's the long-term overall outlook for this stock? Well, we don't know yet, but I guess to successfully do what the stock service, who will not be named again, said, we would have had to get in immediately and, I don't know, maybe sell immediately. But we'll see. Overall, I mean, this looks like a decent company that has a future, at least up to this point. So let me go into some further detail on this. So this is the actual chart here. If we zoom out to the maximum, this stock, this company, just became publicly traded this year. So this goes back all the way to May. The stock was at one point over $80 a share, as you see over here, and it's dropped and dropped and dropped. So it may be a good time to buy. Maybe it's going to come back to where it was, and if it does, that will be great. Now let me go back here, look at the main fundamentals. So yeah, 1 year target estimate according to Yahoo Finance is 71.45. It doesn't pay a dividend. It's got negative earnings per share, which is not a decent sign, but in the short term, that doesn't seem to matter. We have companies that lose money, that their stock goes up all the time. So in the short term, these fundamentals don't necessarily matter as much, but in the long term, they do. And then you see the 52-week range is actually $47.20 and as high as $90. Market cap $27 billion. And what market cap is, that's just the value of the company. Like if you took the total number of shares and added them up, that would be the market cap of the company. So that's the key valuation of the company. So in this case, this would be probably a small cap company, maybe a mid cap in some cases. And that just means you have large cap, mid cap, and small cap. Large cap are the biggest companies. Well, you have mega cap like Apple and Amazon and Google and Facebook, or Meta now, if you're following the news. And then you have mid-cap, which is middle-level market capitalization. That's what that means if you ever see that. Those terms show up when you have like your 401ks, 401k funds. They're often broken into those categories. So, by the way, if the lighting seems dark again up here, I just have to show my audience. It's broad daylight outside. This is my view, by the way. Nice view, right? Waterfront. It's been raining here most of the day, but you see that it's not nighttime. But for some reason, the lighting still looks a little iffy, so we're still working on that, and we have an ad on the music. Skipped. Okay. After that, back to this. I'm going to pause the music. Okay. So you see that. You see where it started, where it's ended up. Here's the Wikipedia article about the company. Here's the actual company's logo. It's an American global software company for robotics process automation, founded in Romania. It's been around for a while, but it just went public this year. And so this is all publicly researchable information on Wikipedia. So we won't get into that. We covered that. We can look at earnings real quick. Oh, they're crushing earnings. Look at that. Q2, Q3. Q4 was reported already, but it's not showing up here yet. But for the prior quarters, they crushed earnings. So that's a good sign. So overall, good signs for this company. Would I recommend it to buy? I guess so. I mean, it looks like, again, it was at 90. It's down in the mid-50s. So, but let me caveat that. This is not financial advice. This is not recommendation. So would I make a recommendation? No. You decide what you want to do. Remember, I'm just a guy on YouTube who may or may not know what I'm talking about, right? Or there we go. So with that, I got to end with this. Please remember to like, comment, share my videos, and subscribe to the channel. And it took me a week to get a new video out. Lots been going on, but hopefully I'll get back on schedule. So thanks for watching this video. Hope you all have a great weekend, and stay tuned for my upcoming videos. Thank you.